The National Bureau of Statistics on Monday released the inflation number for the month of October 2021. In comparison to October 2020, the headline inflation rose to 15.99% in October this year. That's a 1.76% increase from the 14.23% recorded in October 2020. However, on month-on-month basis, the headline index declined to 0.98% in October 2021. This is 0.17% rate lower than 1.15% recorded in September. The composite food index rose by 18.34% in October 2021 compared to 17.38% in October 2020. On month-on-month basis, the food sub-index declined to 0.91% in October 2021, down by 0.35% points from 1.26% recorded in September. For more, of course, on this latest inflation numbers and other burning economic issues on the commodities market space, have here with me Dumebi Iyeke, one of the research analysts with Financial Derivatives Company. Join us now. Good morning, Dumebi. Good to see you.
Good morning.
Good morning. You look great.
Thank you. You too.
Well, looking at that inflation number yesterday, how are you guys, FDC, interpreting those data yesterday?
First off, we forecasted a decline in inflation to 16.31. So we expected the decline, but not as sharp as 15.99% compared to September 2021, which was the data for September 2021 was 16.63%. There are two angles that we're looking at this, and the first one is that, number one, anecdotally, Nigeria's inflation rate or inflation rate for various countries usually moves in tandem with the global inflation trend. And currently we're seeing that global inflation rate is trending upwards. So that's raising questions as to why the domestic inflation is declining. For example, we're seeing that inflation is at a record high in the US, about 6.2%. UK inflation is above 3%. Eurozone as well, their inflation is trending high. China's inflation is also high.
And even here, the fundamentals are not even, okay,
exactly,
we just finished talking about the cooking gas, which has gone up. We have vegetable, we have flour.
Exactly. And even on a global scale, we're seeing that the FAO came up with some data points saying that the global food prices have surged to a decade high. So there's clearly the upward surge in commodity prices. And, you know, it's raising questions as to why domestic inflation is declining. That's one angle. Then the second angle is market reality. So we can see that commodity prices are actually high. And if we look at the data, we saw that headline inflation declined following the decline in food inflation, which constitutes about over 50% of the inflation basket. So directionally, if food inflation is declining, we will see the same impact in headline inflation. So seeing that food inflation is falling, meanwhile, commodity prices are, you know, on the high side. So that's also raising questions as to, number one, the integrity of the data being published. Number two, exactly how this is having so much impact on people. You know, there's already a trust deficit in the system. People really, you know, flaw a lot of things in the economic system. But now we're looking at this on an impact level. How is it possible that how is it possible that inflation is falling and my money in my pocket is not still buying as much in the market? If anything, I still saw on the news today that the producers of sachet water are saying that a sachet of water would likely increase from 20 naira to 50 naira. That is one of the cheapest commodities in Nigeria. And if data is being published that this is going to increase to 50 naira, how much more other commodities like cooking gas that on a year-to-year basis have, you know, surged by over 130%? We're looking at the same impact for commodities like garri, rice, bread, you know, beans, pepper, you know. So even though there's some seasonal effects on some of these commodities, but we can't overrule the fact that there are underlying factors pushing commodity prices high, and clearly these factors are not, you know, reflected in the data being published.
Yeah, talking about the integrity of this data, you know, I was a bit confused when I saw, you know, this data. Now, you talked about September,
Yes.
which was, I mean, September, that was
Yes.
year on year,
Yes.
actually, and that was about 16.63.
Yes.
Okay,
Yes.
year on year, September 2020 to September 2021.
Okay.
And this time around, they are looking at October, I
October,
mean, talking
yeah.
about the headline in
Inflation, yes.
inflation
Yes.
year on year, October 2020 and then October 2021. And
yes.
when we look at it, we'll see that headline inflation actually went up. But what we're seeing trending down is the month on month.
Yes.
You know, like when we
Yes.
look at the headline inflation month on month declining to 0.98% in October. And in fact, all the sub indices month on month are all in the decline. And just as you said, that brings to question the integrity of this report. And of course, what is the reality in the market if we have to see month-on-month inflation coming down?
Yeah. So like on a year-to-year basis, if we want to even look at the impact on our disposable income, if you're earning about 200,000 naira and you were earning that last year, you're still earning that this year, no increase in your income, and inflation as of October 2020 was 14.43%. If we discount what you are earning, means that as at October 2020, your 200,000 in real terms was just about 171,000 naira, meaning you could purchase goods worth about 171,000 naira. Now you come to October 2021, that has gone down again to about 168,000 naira. So clearly the impact on disposable income is really significant. If you're earning 200,000 naira and the real value of your money is just 168, and the price of cooking gas that you, because someone earning 200,000 naira clearly can afford cooking gas. The person earning 200,000 naira is paying rent on an annual basis of probably, let's say, about 500, because by the time the person calculates, then, and meanwhile, your rent is projected to still increase. The landlord is telling you your rent is going to go up to about 600 or even 700, you know, before long. The price of water, let's say you were buying table water before, now the price of sachet water is probably going to increase. You know, you're obviously going to spend more. You know, food items are already costly. So clearly, the impact is a lot more, you know, on the masses. And remember that the more inflation goes up, it really says a lot about people that are going to keep living below the poverty line, because clearly not enough people have as much to sustain themselves in the economy. So it tells a lot on the quality of life. And just last year, the World Bank said about 7 million people were pushed back, you know, below, pushed down below the poverty, pushed down the poverty line as of 2020 because of COVID. And, you know, so, but right now we're looking at not only COVID, we're also looking at other factors, insecurity, exchange rate pass-through, things that are, you know, dampening the quality of life of people. And clearly we're going to see more people, you know, pushed below the poverty line because of this, you know, dynamics that are playing out. And remember that the factors that are even affecting inflation, we're looking at insecurity, we're looking at the exchange rate pass. If we even look at the data, we'll see that imported inflation was actually still high. Imported inflation was actually still reflecting the impact of higher global commodity prices on, you know, domestic commodities. So the dynamics in the market show that inflation has gotten to an inflection point, and we could still see inflation rise, you know, very soon.
Now, looking at this data that is being churned out, what does that mean for your inflation forecast?
You know, it does create some sort of bubble, because when you're trying to forecast for inflation, you have to dwell on, you know, historical data. And if historical data, you know, there are big question marks on the historical data, it, you know, could somewhat make your forecast a little bit inadequate. But I mean, the only thing that one could do is still try to, as an analyst or as economist, and not only, you know, us at FDC, so many other, we just have to still keep trying to make sense of the numbers being published, and still try to, you know, follow through with current market reality and say, okay, this is what is currently happening. This is our own inflation basket. And for example, us at FDC, we use Lagos State as a proxy, you know, for the entire nation, for the entire nation. So our basket is not exactly the widest, I would say, but I mean, Lagos State, accounts for about 30% of the entire, economic activities within the country. So it should still give us somewhat of an inkling as to how commodity prices are still going to go in the coming term and stuff. So it does raise some questions, but I mean, we'll still have to find ways around it.
Yeah. Okay, we're seeing local manufacturers losing about 50% of their profit to operating and forest costs. How do you think this will play out as the festive season approaches?
Typically, during the festive season, we usually see commodity prices, increase, and that's because there's an increase in demand. People are traveling back, people are trying to stock up for the festive season and all. So, but I mean, prices have been high, so we could see them, go higher. And right now, for local manufacturers, the factor really affecting them is the limitation on forex supply, because a lot of these manufacturers still import their raw material inputs. So if the price of these raw materials are high, the exchange rate is a bit volatile, it will continue to affect their profit and obviously increase their operating expenses. So for local manufacturers, the tough business environment is still going to have an impact on their proceeds, on their revenue, on their output in the near term.
And how do you see this impacting your inflation outlook?
Definitely. For now, I mean, let me give that on two aspects. So let's look at the data reality aspect now. So we're likely to still see the downward trend in inflation. That's the data reality now. We're likely to still see that happen, and the expectation or what that would be hinged around would be increased economic activities, because during the festive period we see a boost in output, we see a boost in production just to meet this festive demand. So that would be the reason why the decline in inflation will continue. As for market reality, prices are still going to remain high.
Okay, let's look at the global oil space. Prices are fluctuating.
Yeah.
What's your take?
So there's still the demand-supply concerns. So recently, OPEC, reduced its Q4 2021 global demand forecast by 330,000 barrels per day, and this is, on the fact that demand is, facing some level of heat regarding the surge in coronavirus cases, especially in China, and the fact that there are fears of lockdowns. There are going to be some countries in Europe are going to renew or reimpose lockdown restrictions because of this same increase in coronavirus cases. And there's also the fact that there could be some level of increase in supply because of this, expected demand shortage.
Right. Okay, and recently the FG stated that fuel subsidy will be replaced with transport and other palliatives. Just wondering.
So according to the Minister of Finance, this is supposed to be somewhat of a social safety net for when the fuel subsidy is eventually going to be lifted in July next year. So when that happens, this would come in to help cushion the effect on the people who can't really afford the market price of PMS once the fuel subsidy is removed. Because when we look at it, the price of diesel is already deregulated. The market for diesel is deregulated. The market for kerosene is deregulated. So according to the Minister of Finance, the amount of people who use PMS are not exactly so much. So it means that they can actually afford the market price of PMS. So this palliative is going to be, I mean, it's a good thing if we look at the fact that it's going to somewhat cushion the impact of higher PMS price on the masses. But the most important thing is the implementation. Who are the people that are going to receive this money, and how are they going to receive it? And are they actually going to receive it? We've seen over time that there have been unconditional cash transfers to people. During the COVID time, there was the palliative that was distributed, but then there were still eyebrows raised because the people that were supposed to receive these palliatives said they didn't receive the palliative. So this is another palliative. So the expectation would be that the implementation of this palliative, the people that are supposed to receive it actually receive it, because that's the only way we will see the impact of this. You know, if fuel subsidy is removed, they say they're going to bring a transport palliative. The people that are supposed to receive transport palliative, if they receive it, I mean, it's a good thing.
We'll see how that
Plays
goes.
out. Yeah, exactly.
All right, thank you very much, Dubebi. All right, we take a moment now. We'll be back.